And good Sunday morning to you. Welcome to Invest Northwest. I'm Sean Owsley. Glad you're starting your day with us once again. Well, we're focusing on an area company, and my guest this morning, the CEO of Secured Investment Corporation and Kogo Capital, is Lee Arnold, to talk about his business and what it is they do here in our community. Lee, good morning to you.
Good morning to you. Thanks for having me.
I know you've watched the program. Now you are on the program.
Yeah.
If you can, Secured Investment Corporation and Kogo Capital, in a nutshell, what is it that you do?
Well, we provide funding for real estate investors who want to take advantage of all of these amazing real estate opportunities that are in the market. As you know, when the banking crisis happened and all these properties went into foreclosure, it created this glutton of inventory in the market. So as a real estate investor who wants to go out and take advantage of these buy, fix, and resell opportunities, there's no money. I mean, banks aren't lending to that particular
Lending has
individual.
been so incredibly tight.
Exactly. So if I'm an investor that wants to buy more property, where am I going to get the money? And the answer is big banks aren't going to give it to them. So we actually provide the funding solution for those real estate investors. And we do it, the great part is we do it through other local investors. So we essentially identify what we believe a good deal. We vet it out, we order the title, we order the appraisal on the property, and then we make that available to some of our local internal investors that we have a relationship with, and then they get to put their money into that deal. So it's really the quintessential peer-to-peer lending platform, which in the wake of the banking crisis has really become mainstream now. So there's some big companies out there that are doing peer-to-peer lending, but they're doing it from a consumer lending standpoint. So if I'm a consumer and I want to refinance my credit cards or my portfolio, there are companies out there now that would do that through private funds. But currently there's no company other than ours that is doing it for real estate investors. So the difference for our lending market or our lenders is this. If they go through a peer-to-peer network on consumer credit, it's unsecured. Whereas lending through us, it's secured against first position on real property right here in the Pacific Northwest. So it's proven to be a very fun, safe investment, not only for the investors that are lending the money, but also for the real estate investors who are buying more property.
So two questions for you on that. In a traditional sense, if I'm thinking about investing in real estate, I go to a bank, I put the application in, they either approve it or they don't. Right. You do the same thing, it's just in a different capacity. And is it the rates competitive? How does that all play out? If you can touch on those details.
Okay. Well, first of all, if you go to a bank, you're going to have a hard time qualifying regardless of your credit or your financial situation, simply because banks don't want to lend on property that is in disrepair. And typically when we're dealing with foreclosures and HUD properties and all of the FHA inventory that's been put onto the marketplace, these bank-owned properties, they usually need some lipstick, some paint, some carpet. Banks traditionally don't lend to that particular market. Now, they're looking to lend to the owner-occupant. So for the investor like yourself that wanted to go out and buy the property, you would get short-term money from us, usually 6 to 12 months. Then you would resell it after you've gone in and put in the paint and the carpet and a new roof and made it nice. Now you're going to sell it to the end-user buyer who can qualify for bank financing, because that's who banks want to lend to. They want to lend to the first-time home buyer who's going to live in the property. And with Bernanke doing what he's done and now saying, I'm going to buy $40 billion a month in mortgage-backed paper to owner-occupants, it's a great time to be in the investment space and buying and fixing these properties. The challenge most folks have is they can't qualify. And that's where we differ from banks is we're not real interested in your credit score. We don't care about your past financial history. If you've been through bankruptcy or foreclosure, we don't care. It's a big problem for banks. It's not a problem for us, because we do what's called asset-based lending. So we look at the value of the property to the amount that you're paying for it and say, okay, is this a good, safe loan, and are you going to make money? Because what we want, Sean, we want to help you buy 10, 12, 15 properties this year. So we want you to get in and get out, put money in your pocket, and then come back and do it again and again and again.
Is it obviously, it's a different situation than, say, a traditional bank that would maybe approve a 30-year loan. Right. You're talking a matter of months that you're allowing this loan to go through, to take this property, to fix it up and turn it around, and somebody else make a profit on it. That's so obviously your risk timeline is reduced compared to a traditional bank. Is that correct?
That's correct. Because most of our loans are just 6 to 12 months, we essentially lend the investor enough money and give them enough time to go and fix it up, clean it up, market it for sale, and get it sold, at which point our loan is paid off, the investor gets their profit, and then they have money to go do it again.
What is your fee?
Our fee is we charge 2 to 3 points on the front, and a point is 1% of the purchase price. So a $100,000 loan might cost you $2,000 to $3,000 to get into it, and then our interest rates vary anywhere from 10 to 15%. Really just depends on the nature of the loan. But our loans are interest only, so they only pay monthly payments on the interest. There's no principal buy down because it's only a short-term 6 to 12-month loan. But they service the loan, they get it sold, we recover the entire loan amount, and then they go do it again.
Lee, what if they can't sell the property in the time frame that you guys planned on? What happens then?
Well, that's the great part, because we're not in the business of owning real estate. We're simply in the business of facilitating those that want to own real estate. So if we made a loan to an investor who maybe the rehab took a little longer than they were anticipating, and they call us up and say, look, I know I told you I could pay back in 12 months. Can you guys give me another 6 months? And we're going to look at it and say, you know, you've done a great job on the renovation or the repair. You've improved the value of the property. Yeah, let's extend it for 6 to 12 months. We're not in the business of foreclosure. We will if we have to. We don't want to. We'd rather work with the investor. We are a relationship-based lender, so we want the relationship. We want to help the investor be successful, so again, that they can come back and do it again.
The Secured Investment Corporation, that's located in Coeur d'Alene. As you said, the premise of that business is we lend money to real estate investors who want to take advantage of all the opportunities in the real estate after the real estate bubble, and it burst, and it has been coming back continually, but slowly. Too slow for some, okay for others. It just depends on the pockets and the specifics of the region. As you go forward and you look at this, do you feel with the region's economy that what you do can kind of free up that inventory? Because that, I think, has been the biggest impediment in the housing market. Things are sitting. Banks aren't lending. Do you think you're the opposite of that, where you can kind of get that fluidity in the inventory going?
We are exactly the opposite of that. In fact, part of the reasons I reached out to you in the first place, Sean, is as a company we have a strange situation given this economy. We have more capital than we have loans to put it into. So I'm here hoping that investors will see this and say, wow, finally a place I can go to get the funding to buy real estate. You know, you've all seen the infomercials on TV, no money down real estate. Well, that's a real possibility, and our company provides the access to the capital that a lot of investors wouldn't otherwise have. Something else to consider is 65% of all home sales in the last year were to real estate investors. So banks have this glutton of shadow inventory just sitting there, and they're afraid to release it to the market because they don't feel there's enough competent, qualified buyers. Well, there's a lot of competent, qualified buyers. They just don't know where to get the funding. And that's what we provide, is the funding.
Let's talk specifically about Cogo Capital, and we have some video. I know it was back, I think you said on the 6th of December, if my memory is correct.
That's right.
Memory's a little slow this morning, but and you guys opened a brick and mortar spot here in Spokane on North Division. As we look at video of that, why was that important? Talk about taking that step and what advantage that gives you.
Well, as I said, we're a relationship lender, so what we're really looking for is the boots on the ground investor who is really doing this for their career. This is how they make their living, and they're literally going to buy 10, 20, 30 properties this year. We wanted to have a local presence that was centrally located, that they could come in, submit loan applications, come in and sign documents so that we could deploy capital into the local market. Now, this is the first of what we hope to be many brick and mortar facilities that we'll be opening nationwide. We have another facility opening in just a few weeks from now down in Laguna Hills, California, and coming in now to 2013 and 2014, we've got stores opening in Tacoma, Phoenix, Arizona, Salt Lake City, Nashville, Tennessee, Chicago, Illinois. So from a regional company, we're looking to expand on a national level so that we have boots on the ground and we can deploy capital into those markets, because real estate is rebounding and it is coming back around.
Also allows the opportunity to talk to people face to face and make a decision on an individual basis when you look at their specific criteria.
Right.
The loan programs through Cogo Capital, residential rehab loans, that's what we talked about a lot. Residential purchases, refinances, cash out refinances, commercial loan programs. So there's some flexibility.
Yes. There's a lot of flexibility in the types of properties that we will lend on. Where we don't have any flexibility is we cannot lend to the person who's going to live in the property. That's considered an owner-occupied loan, which we don't do. With the Frank Dodd bill that was recently passed, it's really handcuffed banks and a lot of lenders in lending to the consumer market or the person who's going to occupy the home. So as a company, we decided it was in our best interest to just deal with the rehab investor or those that are buying to hold as rental properties and use those for a commercial basis, rental income and those types of things. So it's interesting, a lot of our clients that are coming to us now have owned real estate for years and years. Many of them have property that's free and clear. So imagine right now you've got a house somewhere here in the Spokane market worth $100,000, $120,000. You've got no mortgage on it. You walk into the bank and you say, hey, I've got this free and clear property. Will you guys give me a line of credit for $60,000, $70,000, $80,000? And that bank is most likely going to tell you no. And it's not because it's not a good loan or that you're a bad borrower. It's simply that they're not playing in that space because that's not the type of loan that Wall Street is buying. Baranaki is buying owner-occupied loans. So the real estate investor that's done well, been very responsible in their business dealings, they can't get financing. That's where our company will step in. We'd love to give that person that's got the free and clear property a cash out refinance on their rental property. They keep the home, they keep the tenant, they keep the cash flow, but now they've got money that they can go out and reinvest, start businesses, buy franchises, whatever they want to do.
That's a really interesting story. That is all the time we have this morning, Lee, but certainly appreciate you being a guest on the program and sharing what you're doing in the community. And